The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we continue to take a look at what is happening in the commodity markets across the board as we wrap up 2023 and move into 2024, we have plenty of things that are on our mind, and we want to have a conversation about those here today on the program. Joining us from Rabobank, Steve Nicholson is with us. Steve, it's always great to have a conversation with you, sir. Merry Christmas, Happy New Year to you. Thanks for joining us.
So it's great to be here. Merry Christmas, Happy New Year to you and your family, and safe travels at Christmas time. So yeah, great to have a conversation as always.
Well, let's dive in. And, speaking of Christmas time, holiday mode in these markets and this trade overall, it's that always happens. I feel like, Steve, we get that thin type of low volume trade here as we work through the final 2 weeks of the year and get into 2024. And largely it feels like these markets kind of entered that holiday mode to some degree, by the 15th of December. Things outside of a few moves here and there have been pretty quiet here, haven't they, Steve?
Yeah, they have. And it seems like, you're right. Last Friday on the 15th is like people said, I'm done for the year. They got evened up and they went home. And I think that's one of the challenges in a market like this, where it's very thin, like you say, people put too much emphasis on, oh my gosh, it moved, corn moved a dime or 15 cents. Well, the reality is that's probably under pretty light trading or pretty light volume. And so don't read too much into the next 2 weeks of market action. But having said that, it does provide some opportunities that, I don't care if you're on the buy side or the sell side, it may provide an opportunity for you that you may want to be paying attention to and not lose sight of. Don't just go home and say, oh, nothing's going to happen. Because I can tell you over the years I've been doing this, particularly on the buy side, when I was on the commodity procurement side, there were opportunities here that I took advantage of. And by the time I got back to the office in January, those opportunities were gone. So same thing on the sell side.
Yeah, that's a great point you bring up, that not to get complacent here during the holiday season, be on our toes, because things can happen in these markets. And to your point, we get that thin trade, but that volatility can increase. And, next thing you know, you can look at one of these markets and say, hey, corn's hitting an overhead target that I set, for instance. Not saying that's happening, but just in general, it's about being on your toes and paying attention, right, Steve?
Yeah, I mean, we're recording this on the 21st of December, and then you look at the board today and corn's up a little bit, but you look at the bean market and we're down almost a dime, and you see meal down a lot and you see oil down a lot. So things can happen that you just need to be paying attention to.
Definitely. I know some of the things we're watching in the markets here as well over the next couple of weeks, even with a lot of folks out of the market or on the sidelines. South America weather, of course. So that's the big talking point here. We're waiting to see, I think, if these rains verify in Brazil. What's your thoughts, your perspective on the South American weather situation right now and the market impacts?
Well, I think it's a great question. And I think to your point, you are in a time period now where you start to think about, if they don't get the rains, this is kind of a crucial time for the crop. And so, people worry about the rains in November or lack of rains in November and even first half of December. And it's like, okay, not worried, but now you're in a situation where, these rains are important. So that's the first thing I think I always try to remind people. But I do think the crop got off to, depending on where you are in Brazil, got off to a good start or did not get off to a very good start. And you've got a lot of beans that were replanted. You had a lot of beans that were late planted. And so you have a lot of variation in this crop, where in the last year, a year ago, everything was absolutely perfect. Our analyst in Sao Paulo is already, and I will use her comment to us. She said she's at 158 million metric tons, just to give you a perspective where she is. So we're under 160. And she said to me, last year when I was predicting a record crop, I felt pretty confident in that number. She said this year, I don't feel very confident in that number, which tells me that there's a lot more variation around that number. And I suspect more to the downside than the upside because of how this crop has been planted and developed. So I think that the market's going to react to that over the next 30 days, both upside and downside, because it's sort of the time of drama or the soap opera or the silly season, however you want to describe it for Brazil. And then just kind of one more point is that the fact that soybean crop got in late in some places, that just backs the safrinha crop up that much more. And of course, you back that safrinha crop up, it gets into time periods that are not favorable for filling on corn. And so you do have the risk of seeing a little bit of a smaller corn crop in Brazil, the safrinha crop, as we get into 2024.
On that note, with the safrinha crop, if it does get delayed and backed up, I'll play a little devil's advocate here with you. We have a ton of corn in the world.
Right.
So if they do have corn production challenges in Brazil with that safrinha crop, how much market impact could it really have on the U.S. corn market, do you think, Steve?
No, and that's a great point. And it's a good point to bring up, because it brings up also what reminds me of Argentina. Argentina is expected to have a better crop, both corn and soybeans this year. So whatever Brazil might lose, Argentina may pick up. So I think the impact could be minimal just because of what you said. Because if you look at whether it's domestic, well, let's say global stocks of corn and soybeans had a big year this year, a big buildup. And so we have a cushion where a year ago we didn't have that cushion. So the impact on the market will be small in my mind. But it does, until we get there, you probably will see a little bit of volatility around the markets to give you opportunities. But having said that, as you see a crop that we'll focus on Brazil, doesn't get out on time, the safrinha crop gets harvested, then that opens up the window for us for exports a little bit longer than it did here in the past year.
I think as well right now in these markets, there's still plenty of carry in corn and soybeans in particular. And that's something that farmers need to be aware of, I would think, right?
Absolutely. And I was just reading something this morning. This is more focused on elevators or responding elevators. But the market now is in a carry. I hate to say this, but there are people who haven't seen never dealt with a carry market over the last decade. And so we've got to, kind of the, young folks coming into agriculture have to understand that. And it does provide you some opportunities, particularly on the farmer side, if you have storage, to say, all right, I don't like the price that say today at 472 nearby March corn, but I do like, 515 out there in March, almost $5 as you get out into next year. Let's go ahead and sell the deferreds, store that corn for there, but also make sure that you do that execution and sell that deferred, other than to say, oh, I'm just going to store it because we're going to get there. That's not the way you play that. But understand what your costs are. Realize the big thing that's different this year and why we do have some more carries, because you have higher interest rates. So understand what your interest rate cost is there as well, because that will dictate to you whether you carry that corn or soybeans or wheat, or whether you sell it now and take that, and don't forget the opportunity cost of that cash.
We are joined today by Steve Nicholson from Rabobank here on the program, taking a broad look at these markets as we roll the calendar into 2024. Steve, I know Rabobank, I just recently saw some notes as you guys looked at some of the margins and looking at different things for farmers moving into 2024. I want to talk about that a little bit. In your view and in Rabobank's view, what's going to have maybe a better margin opportunity here for farmers in the U.S.? Are we going to see, corn, soybeans? What's going to have the better margin as we move into next year?
Yeah, I think when we look at this, and we've looked at this a lot of different ways, across looking ahead to 24, soybeans come up as sort of the winner here. So let's, put that out there right up front. But soybeans, we also have to say, is soybean margins will be squeezed next year. They're just going to continue to be positive. We are very concerned about the corn margins as we look into 24. So these are fully loaded costs. That corn margins could be at best break even, but more likely you could see some negative margins. And so as a grower, that's something you have to be aware of. And one of the things I've kind of noodled around in my brain, and let me make an analogy for a minute. From a risk perspective, farmers are in that mode right now of locking in inputs for next year's seed, and we'll get probably if they haven't negotiated land rents, they probably have done that. We'll be doing that shortly. Fertilizer, chemistry, all those sorts of things, and it's something to think about. Is just I want to challenge people to think about. You're making all these decisions on cost, and so you're getting that cost locked in, which is a good thing. Get that cost in, understand what it is, but you're hanging out here and have not sold anything against it. You have no revenue, nothing to offset that cost, and it's a big risk to hang out there for upwards of 12, maybe 18 months and not cover that risk. On the kind of the flip side is think about what your buyer on the other side is doing on an elevator. As soon as he or she buys that grain from you, they're out and they're hedging it immediately because they know they want to lock in that margin they have. So I would challenge producers to think about that, about locking some of that margin in now and not worrying about is the market going up or down. As long as you can lock margin, then you're going to get up to bat again, or be in the position to plant another crop next year, in 25.
I've had this conversation with a few folks as well here as of late, and I agree with you that I feel like those soybean margins are going to be better here next year. It just looks at that. You look at the expansion to soybean crush and things like that, and it just feels that way. Yeah. But I know too, and we know this, a lot of farmers in the I-states and throughout the Midwest, I mean, they love to plant their normal rotation. They love to plant corn. They love to plant soybeans. They don't vary from that too much. So I wonder if soybean margins are better and we look at the acreage outlook for 24, I mean, where do we pick up more soybean acres? I would have to think that maybe wheat and some of the other fringe acres is probably what goes away for more soybeans potentially, Steve. Yeah,
and it's a point where we're our preliminary numbers on acreage for next year's sowage, corn acres coming down and soybean acres coming up. Don't see soybean acres eclipsing corn, so we're still 91-ish on corn acres. Beet acres around that 88, 89 million acre area. So, what you would expect when you look at the margin side. But you're right, the I-states, they're locked into whether it's a continuous corn rotation or corn soybean rotation. And so some of those fringe areas, and I don't mean that in a bad way, but those that are tangential to the I-states and southern Minnesota, are where those acres can move very quickly. Also keep in mind when you mentioned it is increase in crushing capacity in, would say, bits and pieces across the heart of the Corn Belt, but that Western Corn Belt is where you see the most expansion because that's where the cheapest bean basis has been historically. So those producers in those areas are going to see opportunities as those buyers come to the marketplace and say, I'm going to offer you some beans and I'm going to offer you prices that you've never seen before, which is going to be likely to be, could be, you get 15, 25 cents a bushel higher on that basis for beans. So I think as you look around the edges of the Corn Belt, that's where you'll see the acres move. And to your point on corn, I mean, we have had some conversation with seed manufacturers and seed sellers, and they've seen just in the recent last couple of weeks, really a pickup in their corn sales above last year's sales. And we're kind of you're a little bit left scratching your head thinking, well, where's that coming from? And I think part of it is folks moving into new territories, and so they get a little pickup in corn. But at the same time, we had a good fall. I think there was a lot of field work done this fall, and hydrous applied. So those people are getting those numbers locked in right now. But like you said, they like to plant corn, and it's a high-risk crop, but it's a high-return crop because the yield potential is so great there if you get the weather to cooperate with you.
Steve, I know too in front of us, I want to bring this up. We're going to flip that calendar to 2024, and pretty immediately we're going to have a WASDE report. That January report's always very, very big. Your thoughts as we head into that report, and it's hard to guess. We can't outguess USDA.
No, we can't.
But it always feels like that report. Even if we have a sense of what we could see, there's always surprises with that report, Steve.
No, that's right. That's always one of my big four kind of report days of the year because you get so much. You get the WASDE, you get the annual crop numbers, you get small grains or wheat acres, and you also get grain stocks. So you get all this. You get a huge data dump that day. So I think the couple things I'm watching, certainly watching winter wheat acres. What do winter wheat acres really come out as? what are we seeing? Did we see a pullback in wheat acres? And you look at prices and think probably will see, and the fact you think about the Southern Plains, how dry it's been, that could see a pullback in wheat acres there. The other thing, of course, is watching that corn and soybean yields. We had a pretty big uptick in corn yields in November. Do we get another uptick in corn yield here in January? That's, I think, the question we have on our mind. I'm a little bit skeptical of that, but we'll see what USDA comes up with. The other piece is the bean numbers. Bean yields continue to be a little bit suspect across the board. I think people had, again, kind of like corn, people had good yields in 23, but they weren't great or outstanding yields. And so those are the other things I'm seeing. Also wondering about, we have seen an uptick both in corn exports and soybean exports here. A little bit. We've seen some buying activity also on wheat. Does USDA adjust those export numbers, which they did a little bit in December? Do we see another adjustment there, which could certainly tighten up the bean S&D a little bit more? And then do we see a corn S&D tighten up a little bit as well, or the corn S&D tighten up a little bit as well?
Well, as we kind of put a bow on our conversation here today, Steve, kind of circling back to something you brought up earlier in terms of risk management and being on our toes here. I feel like between now and the January WASDE report is a real good time for folks to put some pencil or pen to paper and have a plan, at least some sort of a plan heading into 2024, right?
Yeah, absolutely. And I think farmers have been rewarded for waiting the last 3 years. And I think that would be that may be a tough or not the right strategy as we go into 24. Not that we're seeing, I don't know that the downside, we've had quite a down draft in prices in 23. I think the downside is limited here, but at the same time, I think the upside is limited. And as you very well mentioned earlier, you've had this buildup, particularly globally and domestically, of corn stocks, and globally an uptick in soybean stocks. So the upside is going to be limited there because the market's going to go, well, why should I bid up this? I don't need to ration any supply or ration any demand here because we have plenty of stocks in the world. It may not be in the right location, but we'll deal with that. So this is a perfect time for producers as we get through the Christmas holiday. Take a little time, take a little breath, understand where you are on the input side, and think about what is it you want? What are your goals? What kind of margins do you want to achieve? And then what is it what does the market need to give you to achieve those goals? And put those places in order. Doesn't say you have to sell, sell the farm, but start that process and get some orders in place and start to build that foundation of profitable margins for 24. It's a matter of just putting paper to pencil and working that through.
I think that is a great spot for us to wrap up our conversation here today. I know you guys have a lot of great research available through Rabobank that folks can check out online and much more. And we do appreciate the time and the conversation as always, Steve. Thanks so much. Merry Christmas. Happy New Year to you and yours. And we will talk to you again soon.
Great. Thanks, Jesse. Great to talk to you. And yes, Merry Christmas to you and your family and all our listeners, and a Happy New Year.
And again, Steve Nicholson with Rabobank. That's going to do it for this episode of Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.